In market news now, weakness in Chinese assets marred an otherwise positive day for the markets. Mainland and Hong Kong shares slid, partly weighed down by the internet giants. Locally, Nempac's share price dropped after it announced that its interim headline earnings will go from a profit to a loss, while it waits to determine the size of its rights offer as the debt-ridden packaging company seeks to raise capital. In other news, pharmacy retailer DisChem saw double-digit headline earnings growth and upped its dividend, but rising operational costs grew at a faster rate than its revenue growth. DisChem spent 91 million rand on diesel to run generators and keep its stores open in the year through March. It warned that rising operational costs linked to load shedding would affect its earnings in the future. To talk to us about the latest when it comes to the markets and look back at the week that was, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. As we wrap up the week, market trading isn't quite over yet, but what's driving markets right now?
Well, so far we're seeing some fairly reasonable global sentiment. I'm afraid local sentiment, of course, is terrible. Foreign markets are keeping an eye on what is happening with the US government debt ceiling. That obviously needs to be raised in order for government to keep paying salary bills and assorted other obligations. So there's going to be a bit of toing and froing there. It generally has in the past been fairly civilly and sensibly resolved, but it always has a risk point, and markets generally tend to wallow a little bit until this matter does get put to bed. Locally, of course, we're seeing issues around both our sovereign positioning, which saw the rand get smashed, and then some rather upsetting about where we're going with load shedding and so on. Locally, South Africa tended to diverge somewhat from the more genial foreign sentiment.
So let's stick with the load shedding theme, because I mean that's probably one of the things that stuck out to me when I looked at DisChem's results, considering the amount of money they spent on those diesel generators. What did you make of DisChem's earnings?
Well, I mean, you'll see, of course, that on paper they were absolutely excellent, and I mean, 20% would seem to be an unbelievable result. However, the market had actually been expecting a little bit more. So DisChem a couple of years ago had struggled a little bit, formed a bit of a low base, and you'll actually see in those results coming through there the impact of quite a lot of new stores and some sort of internal reworkings. So actually they were a great result. But yeah, as you say, I mean we had obviously load shedding spending there, and hey presto, they came in lower than otherwise expected.
When you look back at the week that was, are there company news or an event that caught your attention?
Yeah, I mean, the Telecom results. Now, this is quite an interesting one and raises an important discussion point there. So on paper, I mean, that was quite terrible. There's some very large write-offs there, about 12 billions worth. And a lot of people would look at that and say, wow, well, that's actually a terrible reason for privatization. Well, in fact, it's an excellent reason for privatization. First of all, those losses are going to be taken by shareholders. Secondly, shareholders are not going to lie down and just let it get worse and worse and worse. They're going to climb in, and they're going to really work over the Telecom management until they start getting things right. And I think what you're going to see there is responsiveness to problems. Instead of continuing to see write-offs like we saw at SAA, I think we'll see Telecom get sharply smacked and turn around. And I think that highlights one of the benefits of privatizing state assets.
Let's talk about your conviction towards South African banks, especially in this environment. I mean, it's been great that we're in a high interest rate environment, which has bode well for their earnings. But overall, does it continue this way, or are you concerned when you look at the SA Bank's performance?
South African banks always look over their shoulder at the issue of can they actually get paid their loans back when the economy is weak, and particularly in relation to property and residential portfolios. And a lot of those residential portfolios are probably not in a great space. So I think they're looking very, very carefully at their mortgage books. It's constraining them from actually going out and lending, and it's probably holding back a certain amount of economic recovery and a certain amount of lending to the likes of worthy solar projects, because they're obviously worried about whether or not they'll claw back on the home portfolios. So it's actually keeping their hands in their pockets, and they're not joining in the solar gold rush in the way that obviously one would hope.
The rand trading currently at 19 rand 35. Does it increase the bets for the South African Reserve Bank to go towards 50 basis points next week?
To some degree, the kind of data that we're seeing in both the rand and interest rate markets is pretty much suggesting that it's a foregone conclusion. I think in some ways it's quite a pity because, of course, quite a lot of those problems are supply side related. In other words, some of that inflation is coming through because we've got such terrible load shedding. It pushes cost up, and retailers and others push those costs through to clients because, of course, their businesses are getting absolutely hammered by it. But a rate hike doesn't really deal with the problem that effectively. So from my point of view, I'm personally a little bit disappointed, but I do understand the kind of environment. I mean, the Reserve Bank does have to show some kind of management of inflation. They, after all, don't run power plants.
Warwick, let's leave it there. Thank you so much for your time. That is Warwick Lucas, who is from Galileo Securities, talking to us about the latest when it comes to the markets. Also looking back at the week that was, and helping us to at least ascertain as to where the market is seeing interest rate hikes going into next week at the South African Reserve Bank's MPC meeting, which we will be giving you full coverage of that on that particular Thursday. That is it for me. We're going to take a quick break, and when we come back, we'll have SME on Point with Diabo Seto, so stay tuned.